Welcome to match day number 36 and also the first of the semi-finals of the Share Shootout League, the most vicious, cunning, scheming and downright dirty stock-picking show on television. You're watching CNBC Africa. I'm Bruce Whitfield. Now, by a show of hands, how many of you were disappointed that we didn't have a bit more argy-bargy from the EFF during the Sona address? While on Parliament, isn't it ironic that it's the Democratic Alliance that must now pay back the money? And if Eskom was a share, how many of you would be shorting it right now? We don't know the answers to any of these vexing questions. What we do know is that the league is no more. It's the first semi-final match. It's knockouts from here on, so buckle up because you're in for a bumpy ride. Well, certainly our guests are in for a bumpy ride because they're going to be eye-gouging, ferocious, diabolical and outright deadly as the most vicious share shootout yet this season gets underway. Whoever loses here can watch the rest of the season on television if it doesn't get repossessed because of their failure. At stake, a chance to play in the final and make a charity richer for it. Who said money managers don't give back? Well, they do if you force them. Now, time to get on with our first pair of semi-finalists. Our first stock picker threatened to hire a Twitter crowd just to improve his chances of winning the title of Share Shootout King. Our second stock picker is one of two with a hyphen Smith to his name. I give you, ladies and gentlemen, tonight's players.
My hashtag is Runningdog, hashtag Runningdog. Just use it often, especially in the next show that's coming up. I think they've been good. I think the quality has been fairly high on the show and tough. A lot of these guys have big Twitter followings. I don't know. I suppose I have to say yes if I'm in the semi-finals, but I think it's heavily biased to your Twitter following. So that's I think the most important thing for winning this. Definitely no. I think I saw him on the bottom of the league and I thought, oh, this is going to be an easy challenge. I came in there completely unprepared and he destroyed me, and rightly so. I think he deserved his victory. Now, of course, we normally pick stocks that we've got an analyst either covering and have a buy signal out on it. I mean, we do a lot of research into the different picks. We try and give quality, even though it's only a 30-second clip of a stock. I mean, we obviously do a lot of research. I own many of the stocks that I've picked myself, and we own them on behalf of clients as well. And I mean, it's our fiduciary duty to try and make everyone money. I don't know if I expected it, but I definitely hoped that I was going to be there. I worked very hard to get there. I sort of rustled up everyone I knew on Twitter and got them to vote. I've got to say Sasha, that guy, he's got too much personality. I think the viewers just love him so much. I mean, he's definitely the one to beat. Yeah, Sasha, I'd say he's the biggest competitor. Yeah, definitely the one to watch. Your game plan for winning, I think, like I said, you can pick great stocks, and it seems that the viewers are responding to good stock picks. If they like your company, they vote for you, but I don't think that's all it. I think I've just got to literally go and buy Twitter advertising. That's what I'm going to do, and try and get as many votes as possible. So go and vote right now. Even you can just vote hashtag Runningdog. I think it's, to be honest, as much as Twitter votes has played such an important part in the competition, you should look at the performance of the picks. And I think if you had taken all the stocks that I picked, you would have a nicely diversified portfolio from blue chip stocks to offshore exposure to nice small caps. And I think if you had put your money in the stock picks, even at the times which were dictated by when the shows were filming, you would have done well. I think it's actually, while Sasha's the biggest contender, I think I'm going to go with an underdog. I think it's going to be Kaylive. Yeah, it's well, that's what you do, I suppose, for the show. It's the show about, it goes, show, wife, you.
Halala, 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 halala. So
unlike CLive, I don't DJ. So I do what I do best, which is obviously the fact that I am the best when it comes to investing. So why did I not say the K? Because every guy who's got a K name in the world at the moment has some oil stocks. So that's why I went with the K, because K is live. My competitors, there's only one man I fear the most. One man. He's tall, he's bitter, and he's ugly, and I hate him, and he's gonna crush me. But I will come back and I will destroy him, just like the ant killed the elephant. Anything that has to do with me has to have justice in it, because as you can see, I am the one with the least amount of color in the actual group. So, this is what this means. It means one of two things. Either, like the majority, I made it, just made it. So if I was a matric student or pupil, I would have made it as well. Just 33.333%. So that's how I got into the top 4. Baba, I'm doing it this time. There's two guys that were very, very good in this particular competition. One of them you are looking at. And then the other one is the one I fear the most, Gary. I thought somebody would have tripped him already now and he would have fallen. Unfortunately, Mr. Mugabe beat him to it. We choose stocks that we believe in on the short term. It's very difficult because we are investors. We focus on long term. But for this particular show, because we want to go ghetto, we go for the short stocks that make money in the short and immediate term. In the semi-final draw, I want to avoid Mr. Gary Boyson because I want to see him in the final. There's one man, I don't know from which planet he's from, but he scares the living hell out of me. That's why I call him Sushi and not Sasha. The only gameplay that there is making sure that the numbers are not cooked and people actually vote and they don't go by mass production. No, we must be able to be voted for legally. So let's not use our media platforms to actually gain more votes. I mean, really, if there's any other tenderpreneur out there who looks better than me, I don't know if there is. But look at this belly, look at this smile. I've even got proof that I am actually the best tenderpreneur in this country. Look at the rings. There we go. See that? Look at look at the bling. That watch doesn't come cheap, my friend. So vote for me. I'll make you a tenderpreneur.
Both Gary, who calls himself Runningdog, Boysons, and Clive, Kaylive, Ramathibela-Smith, are out to impress you as our audience and the broader Twitter community in a bid to make it to the final. By now, you should know the rules, but if you don't, look, no white shoes on set. Bring your own jackets, and both of our players have to pick 3 shares. Clive's got his brother's jacket, much younger, leaner brother. Both of our players have to pre-pick 3 shares. Only I know what they hold, and each player must, of course, accept at least one of the other's stock picks. They can choose all 3 if they like, if they're feeling generous, but then they won't expect you to vote for them. Each has got 30 seconds to argue their stock pick. They can choose from the JSE, and we give them an offshore allowance as well, because we are generous that way. Gentlemen, let us start our engines. We've decided by the flip of an invisible coin that Clive Ramathibela-Smith should go first in this round. If you're ready, Clive Ra-Smith.
Yeah.
You are a fan of the short. Odd that. Next to Gary.
This is not fair.
I know. You feel like you've been ganged up against by the big guys, the big kids. Okay, Clive Ramathibela-Smith. In 30 seconds, I would like to know, please, why you think Telkom is a short. In 30 seconds, go.
Because it's reached its maximum, and I don't think that it can run any further than where it is. Managerially, they're struggling as well. They're not being able to tackle the important issues first. And their new ideas have become the ideas of old. They're no proactive, they are reactive, and they're starting to fail. So I'm a bit worried that the stock will continue to run for the rest of the year.
Okay, there we go. Within his 30 seconds, he's used his allowance. Tick tock, tick tock, tick tock. Gary Boyson, I'll give you some extra time as well. You go and lay into it. Tell him he's crazy.
Start shooting.
Boy, that was a long 30 seconds, Croc.
No, I would have probably agreed with you a month ago, but I've actually changed my opinion completely on Telkom.
What?
Because of the possibility that they'll bring out Netflix. I think that is incredibly exciting.
Okay.
I think
is that is Telkom likely to be a partner to Netflix?
A partner to Netflix, and I think that's going to be the issue. If you look at the MTNs, Vodacoms, we've been relying on data revenue. We've been relying on sort of trying to squeeze out revenue out of the cell phone calls. All of that is coming down. Where's the future going to be? I think it's going to be in selling content via your network. And Telkom does own that last loop. I mean, maybe Huge Group is trying to get in there and steal it from them with sort of their routers, but I still think they've got a competitive advantage, owning that last mile. And if they can now sell content down the wires, I think Telkom's still got a bright future. I mean, obviously, you talked about management. I mean, the management has made big promises, and the turnaround seems to have started. I mean, I'm also a little bit concerned as to how that's going to progress. But I think if they can get Netflix in, if they follow that strategy, I think this could be a completely different company.
Clive, one last defence.
Look, there's potential. There could be a partnership, but why would you want to use somebody like Telkom?
Because you've got no one else to use.
Well, you've got a few partners, and MultiChoice have done exceptionally well in that particular market, for that matter, and they're already digital. They're already ready for it.
Yes,
that'll be the easiest and the quickest way to do it.
But already, DSTV doesn't want to undermine its own business model. If it partners with Netflix, we've got a competition issue, don't we?
I suppose you do. But here's the point: is that how long can it run it for? Maybe it might affect the likes of Blockbusters and Mr. Video, but I don't think that it will actually have some impact within the stock itself.
Okay, all right, but you don't like it. You're still shorting Telkom. Gary, you're shooting down the short.
Shooting it down.
Don't shoot down the short. He's only little. Right, Gary Boston from Banani Private Clients. Let's go to your first pick this evening. Then you're in the technology space. Adapt IT is one of the juicy, sexy little small caps. In 30 seconds, teach us.
Yeah, we think that Adapt IT could be the next DOH. I mean, they've got quite a diversified business. So they're in manufacturing, education, financial services, even energy, and they basically provide solutions in there. And I mean, when you say energy, everyone's going, oh, but the oil price is low. These guys would take sort of how you fuel a plane, and you stick the thing in, and they've got the system that measures how much fuel is going in, then links that back into the payment gateway. So I mean, these are essential services. They're in all the big banks. They're in they run SARS system. So they've got a good presence in the big corporate. And we think, not demanding multiple at 26 for an IT company.
There we go. Now, I do like the technical description. When you're refueling your plane, you put the thing in. That was. Everyone knows exactly what you're talking about, which is great because nobody else knows what that thing.
Right, the nozzle clip
thing. The thing.
The thing that you stick in the plane.
There we go. Clive, you got to like Adapt IT. Come on.
No. I like technology. I like the fact that it's an IT, but his presentation might do well at MIT, but not here, not in this show. It's not going to work here because we're talking about a very saturated industry that we're talking about, ICT. We've seen with the likes of, I'm not going to mention names, the guys that have failed to keep it up. Ituba is back, by the way. So these guys are struggling in the current economic situation. So the question is, how long will they last? How long? It's a very nice small cap, very nice, and then the price is also good. But growth strategy going forward, especially with the technology.
Pause there for a second. The price is very good, 26 times earnings.
Yeah,
they're not giving it away.
Yeah, it's not cheap though. I mean, compare it to something like Naspers, compare it to other IT companies, it's not particularly expensive. Compare it to EOH trades slightly more expensive multiple as also. I mean, this is, if you're doing a relative valuation, it's not particularly expensive. And then just to address that, the growth prospects, I mean, they're already in 18 countries. I mean, what Adapt IT is, they own sort of the IP, so they'll take, Microsoft or an IBM, they take their products, they put a little of their own sort of programming on top of it, turn it into a solution and then roll it out. They're moving into, I think they're already in 18 countries offshore. And yeah, I mean, the growth in South Africa, I think, can be spectacular. I mean, it's something that
Clive doesn't do
it's shown headline earnings, compounded annual headline earnings.
One in each knee. Come on, just shoot him down.
33%.
We've seen these, Gary. We've seen these. We've
For
seen
5
these
years.
ICT companies. We've seen them. We've seen them. Remember the tech bubble. We know these things, and we know in a short period of time, somebody comes up with a better idea of how to fill up an airplane, and then they.
But if it already already links into your payment system. If you already run their whole payment system, are they going to really just turf it out? And
Gentlemen,
I think they've got a moat.
Time. Boom. Shot down on this front. Thank you, Oscar.
down.
Right. Let us move on from here. Clive Ramathibela-Smith, your second pick is courageous because there are widely divergent views as to where the oil price is going to go. Some suggest an average of 55 to 70 this year. I saw one forecast, I think out of City this week, suggesting as low as $20 a barrel for oil. And in that environment, you're still willing to buy Sasol. In 30 seconds, tell me why.
I am, because of the following factors. One of the reasons is that finally somebody has gotten through to the Arabs, and OPEC is starting to make discounts in emerging markets and so forth. So that's very critical. But I don't understand why people are shorting a company like Sasol, which is in actual fact indirectly not linked directly to the oil. So because their production of gas of fuel comes from coal. So it is very an unfair judgment on Sasol, and I think people will realize quickly and turn around. And it's sitting at a very good price at the moment.
Okay, it's a very good price because nobody else wants it. That's the trouble. Gary Boyson, I mean, it's so tempting. It looks delicious. At $600, it was terrifying. At $400, it's enticing. At $450, beginning to get a little bit rich again.
Let's hear this.
Yeah, again, at 600, I don't think it was terrifying because the oil price was over $100 a barrel. I mean, and like Clive said, I think that's a very valid point. Sasol has become very linked to the oil price when only 40% of its revenue comes from oil. And a lot of this is in fuels. The whole strategy of the company changed. I mean, they had that SENS announcement in November last year saying that they're changing the strategic direction of Sasol with the Louisiana project, which is now on hold though. So I don't know.
But it's on hold pending clarity, and that's sensible management.
Exactly. And I think if you've got a short-term view, I mean, you're taking a punt on the oil price, unfortunately, which I agree, I don't think is reflected.
It's the right way.
I don't think it's the right way to trade Sasol. By trading it as an oil proxy, you're not finding the intrinsic value of Sasol.
But let's say we're investing in it, and we're investing on a 5-year view at 450
view, I'd accept it. I don't think you're going to go wrong buying at 450 here on a 5-year view.
There we go. Clive Ramathibela-Smith, you've been accepted.
So.
There we go. Gary Boyson, let's go into your next one. You don't even have children yet. You don't have children yet.
Planning.
Yes, okay. But for somebody who has got to go to this place on a weekly basis and look at the blimmin' jungle gyms and has to smell the basting sauce and has to look at the greasy I know that this is a great investment because there are hundreds of people like me who are dragged to Spur on a regular basis. In 30 seconds, tell me why you like it.
I don't know if I would be dragged to Spur. I go to Spur voluntarily, especially when the power goes out because they've got generators in all their restaurants, so at least I can get a meal. But yeah, I think Spur, very, very exciting company. We saw their latest results out, spectacular numbers coming out of them. It's a share price that's traded sideways for about a year, and you've just seen sort of a nice uptick. I mean, they're also getting into bed with Grand Parade, so you don't know if there might be a deal in the wind around Burger King. They've got nice international exposure. It's a franchising model. They've got 490 stores. They're managing to grow that number of stores, pushing offshore.
It's finally coming to life, isn't it? It's finally doing what Famous Brands has been doing for the last 10 years, and that is being a little bit more acquisitive.
Exactly, and they've got a very strong balance sheet, so there's a lot of cash sitting there for them to go out. I mean, there's also rumours now that Ocean Basket, which is family owned, might be bought out by Spurs. So
what's interesting about Ocean Basket is its property backs onto the head office property of Famous Brands in Midrand. There might be a fight for that because Famous Brands just want to punch a hole through the wall and just
Spur wants
acquire
to use it as a surveillance post.
There we go. Perhaps you got to like Spur, Clive. You do like Spur. You like Spur a lot, don't you?
Does my belly give it away? I think it's a fantastic firm. I think I don't have kids, but I've got siblings that love it so much, and I can tell from the excitement of going on a Saturday or whatever the case may be to go there. But what's important, obviously, is also the price earning of the business. It's very nice, and you know that you're buying something that is consumable. And that's the strategy you want to go into, going into the National Development Plan if it's implemented eventually.
Sorry, we prefer to stick with facts and reality.
So
what we know.
I think anything that is consumer related now, especially with lower interest rates, you're going to do really well.
Okay, so Spur gets the big thumbs up. Yeah. I don't know, because you're both regular Spur goers, you've seen the lemon juice and Coca-Cola drink.
The John Lee.
The John Lee.
The John Lee special.
Yeah.
What is the origin of that name?
I have no idea.
Who is one of the directors of Famous Brands who was once in partnership with Kevin Hedaway, with the guys at Spur?
I'm guessing John Lee.
John Lee Halamandres. So the John Lee special dates back to when they were still talking to each other.
Wow.
Yeah, it does. All the ways.
Is that all he had when they had the meetings?
I think that's all they have. It must have been. A bit of lemon juice and some Coke. But that's it. It gives you immortality, which is positive. So what we got so far, person from you, is Adapt IT, shot down in flames, Spur, however, taken with both hands. And then from you, Clive Ramathibela-Smith, a short on Telkom shot down, but Gary Boyson has taken your view, long-term investment view on Sasol. So, who has still got a bite to stay in this fight, and who should be reeling with a feeling of fear and flight? Only you can adjudicate. Do it before it gets too late. That was quite poetic. Remember, this is your league. You decide on who makes it to the finals, and you can make it your own final as well. You choose to who goes into that final. What you have to do, follow at SSO League. Use one of these guys' hashtags, either Kaylive or Runningdog. Will you give the love to Kaylive, or will you run with the Runningdog? Or maybe you'll catch the second half before you tweet your vote. See you after this. It's going to get friendly, I think. This is the Share Shootout League on CNBC, Africa First in Business Worldwide, the only league in the world where spectators can only watch on TV. This is match day number 37, the first semi-final match. Whoever wins tonight's match will go head-to-head with either Sasha Bucks-Narishkin or Nick the Value Guy, Norman Smith, the other double Smith. Your Twitter votes got us this far, and only they will ultimately crown the best stock picker in the land. You follow at SSO League and then crown us a champion. It's that simple. Let's get into the final stock picks of the evening. Clive went first last time. So, Gary Boyson, let's make you go first this time. I am entranced by this one. It's not that expensive. It's trading at the market of the average of the market, which you would expect to do because it is the market. It is the company that runs the market. In 30 seconds, tell me why you like Nicky Newton-King's JSE Limited.
I think it's because of the amount of fees that we paid. How much money that they made. But yeah, I think the JSE, moving from strength to strength, it's, especially, last year, just in December, it was, I think, one of the biggest days in the market ever. I think it was 53 billion. They had 8 listings. And you saw in their interims as well, that growth in listing revenue that they earn when they actually go and list the company has improved dramatically. They've got the market data component, which is hellishly expensive. So I think they've got a good future. They're also a monopoly in South Africa.
There we go. Clive?
Oh, this is tough, eh? Oh, my word. I've got nothing to say because if we don't have the JSE Limited, we don't have me. I don't have a job. We don't have a job.
Shut down the JSE immediately. But in all seriousness, that's fine. It's got the monopoly.
Yeah.
But we're going into tough economic times. There isn't necessarily the great promise of new listings in 2015 and into 2016. It could be a bit of a drier season from that respect. Sure, the fees go up, but as the economy slows down, do we not see volumes petering out a little bit? Is that not perhaps a warning signal, Clive?
It is a warning signal, but here's the thing that I like about the JSE is the structure of their business. And I'm talking about just from marketing itself. To list things like X, for example, to have them available. The African venture is also very much exciting. So they've become a platform for anybody that wants to participate in the market. So even if you've got a little clavira on the little corner there and you want to really raise capital, there is the platform. And that's why they're so attractive around the world. Their financial systems are very strong.
And I like the fact that the IT is back in Joburg and they've got a big fat generator.
That's
useful. Because they had a couple of breakdowns with London and that seemed a bit ropey.
Yeah.
But the IP locked into that JSE building is absolutely huge. I was in there the other day and just looking at the executive team going, clever. Okay, they're all, it's like a slightly older Discovery crowd.
Yeah.
Sorry, Nikki. So you like it? You're accepting two of Gary's picks?
It's difficult. I can't.
You are?
Bruce.
You're accepting it?
And I am going to accept it.
Cool.
That's 2.
That is 2. Yeah. And I'm hoping that my followers will understand the reason why I can't shoot down JSE Limited.
Okay.
That's what I'm counting on.
Oh, that's what you're counting on. That's what you're hoping for.
And I'm hoping that he'll understand the last
I'm counting
pick.
on your followers remembering
I'm looking at your final pick and I'm thinking, boy, you're the bravest guy on this floor. Because not only have you wanted to short Telkom, not only have you gone long Sasol, but you also want to pick a share that in the last couple of weeks has come out with an announcement warning that the profitability of its Nigeria business is delayed once again because, oh boy, the Naira's weaker. Oh boy, we paid too much for Dangote flour mills. Oh boy, oh boy, oh boy. You've got 30 seconds to test our mettle on Tiger Brands.
The reason why I believe that a lot of people dumped the stock a couple of days ago is simply because they don't understand the mechanism behind the business. If they knew that they could go out into public and tell people about this current situation and people would dump the stocks, that would not make sense for management to do so. So they obviously have a strategy behind it, and that's why when you read the news on the Fin Week last week, it shows that they already have a plan B of how to actually resuscitate that business on the African continent. You can never go wrong, Bruce, when it comes to food, especially when you brand it yourself.
Okay, yeah, I'll take your word for it. You're an expert. Gary Boyson. I need new jokes. Gary Boyson, Tiger Brands is a compelling tale. It's got delightful brands. It really has. It is a solid business, but is it good enough to put money into?
You know, again, it depends on the price. I mean, those results are pretty poor. I mean, guys are they're not happy with management of Tiger Brands at the moment after the Dangote deal, where they sort of said, well, we made this, it's a mistake. Oh well, we learned a lesson. Sorry for you shareholders that got burned. I mean, it's definitely not popular among investors at the moment. But again, if you go back to the history of Tiger Brands, and I think you do it over sort of...
It's not like they've fixed the price of bread in the last 5 years. That's a positive.
Yeah. But I mean, you look at it, if you've owned Tiger Brands over the last 15 years, I mean, the amount of things that have spun off and what you would be left with is absolutely insane. The kind of return that you would have
Spar came out of there. Adcock Ingram came out of there. A whole bunch of really sexy businesses. Is there anything left to spin out of it then?
They've still got some quality in there. I mean, it is one of my favorite shorts, but I mean, with the share price re-rating that we've had recently, I'm actually looking to buy it here. So I've got to accept.
The Mutual Appreciation Society of Share Shootout. I don't want to talk to them anymore. So you've accepted it.
I'm going to. I'm busy.
Weak man. Only your votes can decide the destiny of these two lovely, sneaky and cutesy stock pickers. They were hugging before the show and taking selfies together. There, I knew that I was being set up. So, voting closes at midnight on Sunday. That's when voting closes. It closes at midnight on Sunday. All you've got to do is follow at Share Shootout League, at SSO League, and you vote for your favorite stock picker. You use the power of the hashtag. We'll be back next Tuesday with match day number 38 in the second semi-final match, which is hopefully a little bit more feisty and less friendly, between Nick the Value Guy, Norman Smith, and Sasha Bucks-Norishkin. If you thought this was sweet and cuddly, you won't want to miss next week's semi-final match. I'm going to be provoking them and sticking the red hot pokers before, making them angry, because these guys were just too nice. It's been a tough season, but we're very close to the big finale. We'll be back next Tuesday at 8:30. Till next week, do stay cunning. Come on, guys, hug. That's what you like to do.